Well, it's why I always say I talk about what happened with rates, not what's going to happen with rates, because at the start of Tuesday, if you would have asked me which direction I thought rates were going to move, I would have said probably not very good. With the news, we had the op-ed from Stanley Druckenmiller criticizing Scott Bessent that was echoed by those at Citadel Security. So a lot of big names on Wall Street were not happy with what was happening with the bond market. So I thought for sure rates were going to go up, and they didn't. In fact, it was the best day for the 10-year Treasury since the ending of June. The 10-year fell 8 basis points, and then we saw some positive movement for the 30-year, according to Mortgage News Daily, down 4 basis points. So what's going on? Well, we did get a bad consumer confidence report, which can always be a sign that, hey, maybe we need to stimulate the economy, could lead to lower rates. We did get a decent housing report from Case-Shiller, but a lot of people are pointing to the change in the Iran war and that now we're focusing more on economic pain than sort of a military fight. And so that could be a good thing for markets and particularly oil. If we see less fighting, especially with regard to the Strait of Hormuz. And we've seen that reflected in oil prices, with oil down about 7.5% just this week. And so that's probably what is causing rates to fall. So let's hope oil keeps falling. Let's hope rates keep falling and we keep moving in a positive direction.